curious about the move in semiconductors today. It seems like it was off of the ASML sort of warning, but ASML said AI chips were strong, and it's NVIDIA down 4.5%, AMD down 5%, say Broadcom down 3.5%. That seem percentage-wise to have suffered the most. What do you take away from that?
So these stocks have rallied a lot in the last few days, but as far as the semiconductors in general, as we talked about last week, while we see a lot to like about the market here and the pros outweigh the cons, the semis underperforming the broader market is a bit of a concern because we look at those as a leading indicator for the economy as well as the market. So while the AI area may be strong, semis are embedded in just about everything we use nowadays. So if you're seeing weakness in other areas besides AI, that could suggest, that manufacturers had a lot of inventory on their hands. So that's something to keep track of. But for the broader market as overall, we still have more pros and cons, I believe. Keith was mentioning the Fed. While the pace of cuts may be slower than anticipated, the Fed and central banks around the world are in easing mode. 19 central banks currently, based on our last tally. That's the most since 2021. And you have the earnings. Breadth has been phenomenal in this market, so that just adds to it. So then those are positives. I think that can take us into rally into the year till the end of the year. But then we have to think about going forward into next year. The 1 year and 2 year returns for the market are both in the 95th percentile relative to history. And the last time that happened was early 1999, and then you have BlackBerry ringing the closing bell today. It brings us back to the late 90s and memories of then. But so we have this period where we can't keep these pace of gains going forever, and we're going to need some time to catch our breath, so to speak.
Right. Okay. So, Keith, you point out the S&P 500 also is up 10 of the last 11 months, and this hasn't happened. Strongest start to an election year since Trump and Biden were in elementary school back in 1950, right? So what is the positioning then for investors here? I mean, I guess if you stayed fully invested in the market in the S&P, you're very happy, but what happens next?
Yeah, well, I still think you should stick with the primary trend, which we think is still higher. I do think we're going to have at least 1 or 2 hiccups before a year end. I mean, we haven't had that October volatility, but we still have 2 months left in this month. And I think there's going to be some uncertainty around the election, how quickly we know about it. So, I think the investors, should be prepared that it's often 2 steps forward, 1 step back. But in general, when you have that, 10 out of 11 months, you have good breadth, as Paul mentioned. Those are all signs typically of a bull market. And then when you look back at historical bull markets, we're up a little bit over 60% historically. Depending on how you measure this, the median bull market's up over 100%. So you will likely moderate as we get deeper into this. And again, maybe short term, you're seeing a little bit some complacency in like the put to call ratios, some sentiment metrics. So again, don't get complacent that there's not going to be any downside. But in general, if you're looking at the next 3, 6 months, 12 months, we still think the primary trend is higher, and you want to stick with that. And we all still have an emphasis on equities overall.
Okay.